So today we witness a bloody day in the markets with news publications like the Wall Street Journal highlighting how this is the fourth straight session of the market falling down on fading hopes for interest rate cuts. But at the same time, we've also had news publications like Seeking Alpha state that the market sell-off may only just be the beginning.
No! God, please, no!
And so in this video, I want to go ahead and highlight what we're currently seeing in the broader markets, as well as talk about what we could be seeing moving forward, as a lot of the action taking place is leaving a lot of market participants scratching their heads wondering what is going to happen next. Now, there are some good things, there's some positives, but we still have a lot of negatives that I want to go ahead and address. Now, looking at things from a positive perspective, today we had pretty much the Beige Book, which if you guys are not familiar with what the Beige Book is, it's basically this economic report that gets produced from the Federal Reserve, and it only comes out about 8 times within the year. And I want to go ahead and highlight a certain portion of what we got from today's report in the Beige Book. And that is this section right over here talking about prices. Now, interestingly enough, it mentioned that supply disruptions from the Red Sea and the ships getting seized, as well as the collapse of the Baltimore Key Bridge, which if you guys are not familiar with that whole scenario, you guys gotta watch the video because that was insane. We literally had a boat crash a whole bridge. But anyways, going back on point, the Federal Reserve mentioned that that's not what's contributing to pretty much the widespread price increases. And instead, they said that a lot of it is coming from insurance rates, and it's for businesses and homeowners. And pretty much they also highlighted how a frequent comment from the firms was that the ability to pass cost increases onto the customers have weakened considerably in the recent months. And so essentially what this means is that what we're seeing from inflation from a supply chain perspective is that we're seeing supply chains not have a huge influence at this current moment, which we're going to go ahead and talk about further in this video on how things could completely change. But as of right now, things are not looking bad from a supply chain perspective. And right now, the biggest hike is insurance premiums. But we talked about in previous videos, and for those within the Push and Profit private group, how, insurance premiums have pretty much been lagging, right? We had, insurance premiums for homes and also for autos, have this lag effect where during the pandemic, we had homes spike up massively, we had cars spike up massively, and we saw insurances didn't catch up. Yet now insurance have pretty much caught up with their premiums, but the actual, products like homes, they're kind of slowing down in prices simply because, of course, the demand for homes is relatively flat, especially when you have interest rates so high. It's very difficult for buyers in the market to completely even look into buying a home. And then, of course, when we saw the last CPI data, right, the Consumer Price Index data, show that autos, used autos, and new autos, and even rentals were falling down. And so that's good because, of course, insurance premiums, they had this lagging effect. And so eventually they're going to settle down a bit. And then on top of that, with this report, it mentions that even the companies of these insurance or these firms, they can't even raise it even higher because the consumer is so stretched thin that they can't even afford any more price cuts or price hikes for these insurance premiums. And so that's good. That means that that area of inflation is eventually going to settle down. And while that's good for now, well, the problem is that we still have a lot of geopolitical conflicts going on, which I'm sure everyone is familiar by now. You've probably seen on Twitter or X or some other media outlet talking about World War III or highlighting everything going on in the Middle East. And right now, things are calm for the most part, right? I say calm with the asterisk on there, but things are calm. It's not, too high tension like what we had during last weekend. But the problem is this could severely impact supply chains. And this is something that Jerome Powell actually mentioned in his last recent speech, stating that right now the Federal Reserve kind of has a bit of a blunt tool where, yeah, they could go ahead and kind of stifle demand for purchasing for consumers. But if we have supply chain issues, well, that's something that the Federal Reserve cannot really control. And the reason why this could get out of control is because, for those of you that don't know, the Middle East has a huge role in the price of oil. And so we could see oil start to spike up. And now some people might say, oh, well, that doesn't matter, right? Well, here's the thing. Oil plays a huge role in transportation and also manufacturing. And so when you start to see oil prices go up, well, you tend to see food prices start to go up as well because, of course, it takes energy and fuel to go ahead and transport the food to your local store. And so That's a huge concern right now. While right now, currently, supply chains are not getting disrupted, the concern is that they could get massively disrupted and we could eventually see kind of inflation resurge up, which is why the Federal Reserve is kind of pushing the idea of rate cuts down the road or kicking the can. And that's what's causing a lot of uncertainty in the markets, right? Because you have the idea that we have conflict, and then the idea that inflation is going up, and the idea that because of all this, well, rates may have to get delayed even further. And that's not good. That doesn't bode well for the markets. Now, yes, we have had a bit of a frothy market, right? 2024 has pretty much been a straight ride up for the most part, especially for a lot of the mega cap companies, with the exception of Tesla, which I covered a tremendous amount of times on this channel, highlighting how Tesla has been a huge loser for 2024. It was a great, player in 2023, but I switched my stance back in December 28th, stating that it was a bit overvalued and that it was going to fall down. And for a while, I got a lot of pushback of individuals saying, no, Justin, you're wrong. This is the bottom for Tesla. And we ended up seeing Tesla continue finding new bottoms. And so here we are. But again, that's a different story. We're not going to go ahead and talk about Tesla. We're not going to talk about how the people were pretty much buying all the dips, deploying all the capital in Tesla while it's falling down. And I was the one saying, look, you kind of want to be a bit patient over here and you don't want to buy in. Now, of course, you should always do whatever you see value in, and you should never follow what anyone says on, YouTube or X.com or anywhere, and that includes myself, right? You guys shouldn't do whatever I do unless you see value. But in my long-term portfolio, here's what I'm doing, right? I'm not actually buying at these moments yet, and that's simply because I think we're gonna have a good opportunity in the future. It's just right now, there's not a lot of, there's a lot of uncertainty, rather, is what I want to say. And so because of that, I don't want to do anything in my long-term portfolio. My long-term portfolio is just very simple. It's just buy and hold. And so I'm not pretty much just recalibrating my long-term portfolio and buying and selling. I don't do that. I pretty much just buy and hold, and I just wait for good opportunities to buy. It's just right now, from a long-term perspective, I think we're going to see more pain and better opportunities in the future. Now, in my short-term trading account, because of course, trading and investing, I always say they're two separate vehicles. I think people get it mixed up. I see a lot of people who have long-term portfolios and they claim they're long-term investors, but then they're in and out every single day. And it's like, bro, you are not being a long-term investor, right? You're basically trading. And so, in my long-term account, I'm not doing anything. I'm just pretty much waiting silently or patiently on the sidelines. But the swing trading account or the trading account, well, that's where a lot of the fun is actually taking place, right? Because when you're a long-term investor, volatility is absolutely horrible, right? You just want things to kind of be slow and steady and go up. But when you're a trader, volatility is kind of the moment where you rub your hands, because there's a lot of intraday and swing trade opportunities. And so if you guys want to have access to pretty much the opportunities that I highlight within the Push and Profit private group, make sure to check out the first link in the description below, because that's where you have access to the Push and Profit private group, where every single day the markets are open. I provide an overall briefing of where I see the market going, as well as highlighting some trade ideas, both intraday and swing trades. So make sure to check out that link in the description below. But that pretty much is what we're seeing in the markets, a lot of uncertainty. And so, of course, hopefully, fingers crossed that things in the Middle East start to subside. But right now, we're still hearing, word of retaliation, right? Or kind of just, one side getting back on the other. And so that's, of course, kind of a nail-biting situation and leaving the markets kind of just confused and exiting, right? A lot of selling pressure. A lot of people are just exiting. And so that's why we're seeing a lot of selling pressure. But with that said, I don't want to make this video any much more longer than it needs to be. Hopefully you guys found value in today's video. And if you haven't done so already, consider subscribing to the channel so that you don't miss out on any future video. And I'll see you guys on this next video right over here. Take care, guys.